The important level to keep a close eye on during our last review was 35.45, which if breached did portend to something a little more bullish unfolding. So as we can see, that level has been overcome by quite a significant margin, and it does now open the door to see a retest of these prior pivot highs just above $39, and that will be the next port of call and another very important juncture indeed. So we are looking at the weekly time frame this evening just to gain some insight into these larger degree patterns. So from the late 2008 lows, we have seen an A, B, C correction high, likely completing a larger degree wave A. Now also note from that point we've seen an almost textbook A, B, C correction to the downside. So A, descending triangle into wave B, quite a truncated wave C. That said, it did just break down through this 61.8% retracement level by a small margin before the bounce ensued. So certainly at this juncture, everything looking very good indeed, but we can't get away from the fact that from those prior pivot highs, we have seen an almost straight line decline, retracing pretty much all of that prior movement high. So it does still suggest that we're seeing a larger combination pattern unfold. So from the high of wave A, we've seen a zigzag down, so A, B and a wave C. Then we have this intervening wave X high. Now what I'm looking for here is to see a larger flat pattern unfold. So we have wave A in position. If we do attain those slightly high levels and reject, then wave B is also going to be in position. Then looking for this minor line of support just above $30 to be revisited. That would complete that flat correction and what's known as the double three, and then we would be in a very good position to see a multi-month, if not a multi-year, trend to the upside. Now the make or break point then is still the high of wave X. One of the little known Elliott guidelines is that once an intervening wave X high is overcome, it does suggest that the whole corrective pattern has drawn to a conclusion. So really, let's say a line in the sand to give it a bit of wiggle room, $40. If that region is overcome, then it's possible over the longer time frame that we attain $50, which is pretty much all-time high status. So certainly looking much further down the track there, and we'll just take one pattern at a time and see what transpires if and when the high of wave X is revisited. Now, no reason to jump on right here and now. Not shown on this particular chart is type A bearish divergence on the daily time frame. That said, it has yet to trigger, but if it does, it may well give us an opportunity to jump on in a week or two's time. I would expect to see either a small consolidation pattern or a minor degree ABC correction to the downside if that bearish divergence does trigger. So a little patience required, but certainly looking much more bullish than it has for some time.